Welcome to the DSMR. This briefing highlights where smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. When smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over after the video to create a free profile. And with that, let's start. In communication services, institutional activity reveals a split strategy. Smart money has officially entered a markdown phase for diversified telecommunication services, entertainment, media, and wireless communication services, where lower price action is being leveraged to push prices down towards a discount zone and generate supply. Conversely, institutional investors have entered a markup phase for interactive media and services, actively driving prices upward to generate demand and attract retail buyers through rising price action. In the discretionary sector is heavily defined by a massive institutional accumulation campaign alongside ongoing markdown pressure. Smart money has aggressively entered an accumulation phase within the distributors, hotels, restaurants, and leisure and household durable industries, quietly absorbing shares from the supply pool and retail investors who are exiting their positions. Meanwhile, a markdown phase is firmly underway in automobile components, in textile, apparel, and luxury goods, as lower prices are utilized to chase away retail capital. Defensive positioning within the consumer staples show clear signs of rotation. Institutional investors have entered a markup phase for consumer staple distribution and retail, driving prices upward towards a profitable zone to attract retail interest. At the same time, smart money has entered a markdown phase for both food products and personal care products, steering prices into a discount zone to cultivate supply. The energy sector shows a unified, aggressive institutional push. Smart money has fully entered a markup phase across both energy equipment and services and oil, gas, and consumable fuels, driving a strong upward price trend to generate demand and attract retail investors into the sector. The financial sector highlights a targeted accumulation and markdown strategy. Institutional forces have entered an accumulation phase for financial services and mortgage and real estate investment trusts, soaking up available supply from departing retail participants. Simultaneously, smart money has entered a markdown phase for banks and consumer finance, pushing asset prices towards a discount zone. In healthcare, smart money is orchestrating a highly concentrated accumulation play in biotechnology, having entered an accumulation phase to buy heavily from retail investors exiting their position. Elsewhere, institutional capital has entered a markup phase for healthcare providers and services to build upward price momentum, while healthcare technology has entered a markdown to push prices lower into a discount zone. The industrial sector exhibits mixed institutional behavior. Smart money has entered a markup phase for aerospace and defense, forcing prices higher towards a profitable zone to attract retail participation. Concurrently, a markdown phase has been initiated for building products and passenger airlines, with institutional players depressing prices to chase away retail capital. In technology, the sector is experiencing broad institutional distribution. Smart money has entered a markup phase across communication equipment, electronic equipment, instrument and components, semiconductor equipment, and technology hardware, storage, and peripherals, lifting prices into a profitable zone to drive retail demand. The materials sector is dominated by intense accumulation alongside broader markdown behavior. Institutional buyers have entered a dedicated accumulation phase for paper and forest products, stepping into to capture supply from exiting retail investors. Meanwhile, smart money has entered a markup phase for chemicals while simultaneously entering a markdown phase for construction materials and containers and packaging to lower prices towards a discount zone. Activity in real estate sector is defined by targeted downward price pressure. Institutional investors have entered a markdown phase for retail estate management and development, deliberately pulling prices lower into a discount zone to generate supply and isolate participants. The utility sector presents a highly defensive accumulation stance paired with widespread markdown pressure. Smart money has entered an accumulation phase for water utilities, buying steadily from the supply pool as retail investors exit. Meanwhile, institutional forces have entered a markdown phase for electric utilities, independent power and renewable electricity producers, and multi utilities, letting falling price action steer assets into a discount zone. In closing, the goal in investing should be to move with smart money and not against it. Our goal is to find where that smart money is. An ideal bottom for going long is when smart money has exhausted accumulation, and that's the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. If you find this report helpful, show us some love by clicking the like and subscribe, and we'll see you at the next one.